Indeed, a very warm welcome to you. This is the Business Hour podcast. My name is Jimmy Mbogo, and today we're going to focus on bookkeeping for SMEs. And I will be joined by Alex Kenyani, who is a senior manager right here at Deloitte in charge of business process solutions. And just before we go into that discussion, here's your business tip for the day. And our business tip for today says, luck is preparation meeting opportunity. That is by none other than Oprah Winfrey. And of course, as promised, I'm currently joined by Alex Kenyani, a senior manager right here at Deloitte, to be able to give us notes and tips on what you need to do in terms of when it comes to your bookkeeping. Alex, karibu sana to the program.
Thank you for having me on the show.
All right, and let's go straight into this issue of bookkeeping. This is one of the problems that SMEs continue to face every day. And whenever they go to banks, one of the things they're being asked about is, can we see your books? Can we see your records?
Yes.
How important is it to have a proper bookkeeping method?
It is important to have a proper to keep your books in order, your books of accounts. And the reason for this is that this will be able to present or display the actual performance of your organization or company.
Okay.
It also helps you to be able to get opportunities in the market, opportunities in terms of funding, and opportunities in terms of getting new investors in your business.
All right, but again, Alex, there are those who are saying, I'm just starting this account. This is a new business that I want to venture into. Why do I need to start accounting? It's only been 2 months. It's only been 4 months.
What we're facing, and most of these businesses are facing, is they, at any given point, are not able to tell the actual position of their business.
Okay.
If you talk to majority of the small organizations, they have not been in a position even to tell you what profit or loss they are making on a month-to-month or an annual basis. Of course, from experience, the reason why most of these companies or small businesses are surviving is because of the circulation of money within the business.
Yeah.
But in actual sense, if they were to sit down and look at their books, they will actually be in a loss. Some of them major losses.
Okay.
So keeping or making sure that they have or they are maintaining books of accounts will help them know where is the business going, what direction is the business going.
Yeah.
Yes.
Okay, and that brings me to this question in terms of when I'm preparing my books of account, what do they need to capture from the onset?
Thanks for asking that question. And I would want to combine my response with technology. Bookkeeping from historically has been looked at to be complex. And most businesses or most business owners start businesses and they don't have any background in finance. But with technology, with the current technology we have, bookkeeping is as easy as the way you use your phone.
Okay.
And I'll give an example. When you make a sale, most businesses record them in books. You have manual books where you write, today I've sold X, tomorrow I've sold X. Now, bookkeeping and using the current technology is the same thing. What you'll do is enter into a system.
Okay.
And when you enter into a system, what happens is you end up already updating your books of accounts, which is the same thing as you would have written in your books.
Okay.
So with technology at the moment, and most of the accounting systems being online, it is as easy as using your phone to maintain your books of accounts. Yeah,
but again, Alex, there's also the fact that, and this is a problem that we've seen with so many SMEs, and they're saying, I don't want to focus on where the money is going. I'm still trying to build this business.
Yes.
Is that a risk?
That is a big risk, because if building a business involves finances, and for you to be able to be able to tell what is the state of your business, you need to have the right books of accounts. For you to be able to grow your business, concentrate on growth, you will obviously approach investors, you will approach banks.
Okay.
The first thing they will ask you is, do you have, give us your recent financial statements. which will be able to display what is the level of your revenue per month, what is the level of your revenue per year, what is the activity that goes through your business in terms of funds, and also they will also to look at, are you in the right position? Is your business sound? Is it healthy for them to give you financing? Because they will look at, what debts do you have? What do your customers owe you? What does your bank account look like? What assets do you have in place? And when also look at assets, most of these organizations do not even know what is the value of their assets. Because assets have to be valued periodically. So you could find an organization that has, say, assets worth 200 million, but they are not aware. Those assets can actually be used to access financing to grow their business.
All right. And again, like when you're looking at these books, and you've talked about things like debt, for most SMEs would consider bookkeeping to be, this is how much inventory I have, this is how much money I have, this is how much money I have spent, or I've made profit or lost. But they do not focus so much on how much debt do we have as a company and our assets.
Yes.
Why is this important?
This is very critical. It is very critical to focus on your debt, because the reason why you should do so is because you need to know whether the business, has continuity. Because if you get to a point where your debt it's more than the assets you own, then you ending to a scenario where the business could become insolvent. For small and medium-sized companies, it is being insolvent is as easy as waking up today and your business is gone. So that is what it means. So it's important for them to be aware, what debts do they have, how are they servicing those debts, what are the interest rates for those debts, are they reasonable for the kind of business that you're running.
Yes. And again, just going by what we've been able to see of the last couple of years, is the fact that you'll find an SME that is very liquid but has no assets at all. They're doing their business online. Is there a risk associated with it?
Yes. Now, and that is happening to many businesses that are operating at the moment. In that case, what happens is that the risk is, it's very difficult to demonstrate to an investor. It's very difficult to invest to demonstrate to a funding organization, a bank, or any other funding organization to show what type of business you're running. Is it are you capable to take up additional financing, or are you able to get, say, a bank loan from the bank? And those are the business that would fail. If you wake up in the morning and your business is gone, because you have no asset base for your business to be able to if it's going down, to be able to look for an alternative to get funding. Because assets we call them the long-term assets, the non-current assets, and you have assets that are in form of, say, debt, your debtors, and assets in form of your what you hold in your bank accounts. What is more critical for funding and investing mostly is the non-current assets. The properties, the business premises. Maybe if you look at, if you have fleet of vehicles used for your business, that is very critical for any business to be able to secure financing.
Again, but I'm sure this is something that every business will tell you. We have assets and we have liabilities. What should that ratio be like, from where you sit as an expert? What should be the ratio of assets and the liabilities that you have as a company? For a healthy business,
the ratio of your liability should be at least 30 to 50% of your assets.
Okay.
But we know there are companies that have gotten to a level of even much 100% of their assets. So a business doing 30 to 50% is a very healthy business.
Okay.
A business going to the levels of 80, 100, over 100%, then that's a red flag to your business, because you putting yourself in a position where you might end up not being able to pay those debts or service them as they are required.
Okay, let's talk about some of these inconsistencies that we see, and you'll find probably an SME for 1 month or for 2 months straight, they had their books of account very well done, and then there's a gap, and then you go forward, and after 3 or 4 months, there's another book of account. What is the risk in terms of just not having that consistency?
Now, there are a number of risks for not having the consistency. One of the other critical aspects that is coming up that is affecting a number of businesses is also compliance in terms of tax compliance. Because if you do not declare, say, the first 2 months your books are okay, you've declared the right VAT for those 2 months, then in the next 2 or 3 months you've declared your books are not in good position, you've declared the wrong VAT, then you're putting yourself into an exposure with the tax ban. The other risks you look at is in terms of being able to display or being able to show to anyone the current position of your business. If you're not putting your books in order in, say, a certain month, or in a certain period, you have months that are accurate, others are not, then it doesn't display the accurate position of your business. When that happens, you putting yourself at a risk of not knowing the actual position of your business, and not knowing the actual position of your business, it also affects your liquidity. You would wake up one day and you're unable to pay your employees. You would wake up one day and you're unable to service your customers, because you do not have, you're not liquid enough to be able to do that. So that is a big challenge. And when I go back to the issue of the taxman, I think the taxman has become very aggressive. And for any business that are operating in our environment, they need to make sure that they are as compliant as possible. You don't want the taxman to knock on your door to start asking questions that you can't answer. And for most business persons, in the SME sector, cannot answer most of the questions that will come up.
All right, let's talk about an investor comes to you and tells you, I want to put X amount of money into this company. For you, from where you sit, in terms of when you check the books of this company, what is the first thing that you check?
So when an investor looks at your company, they'll look at it from financial performance position. And financial performance, they'll focus on your assets and liabilities. For example, if you are to sell off your business, assuming you're running a business, what an investor will pay for will be the net of your assets versus liabilities. So assuming your value of your assets is 200 million and your liabilities are 300 million, then you cannot actually sell your business. Yes. So assuming also that your value of your business is 200 million, but your assets are valued at 200 million, but your liabilities are valued at 50 million, then you see the net off is 150 million. That is what you need to pay for to an investor. Now, that applies the same thing when an investor wants to invest in your business. They will look at what are your assets, what is the value of your assets, what are the liabilities you have in your business. Then they'll say, okay, I can buy 30% or 40% of your business. They also focus on what is the return, what is the average return from your business in the last 3, 4, 5 years.
Yeah.
I think what is reasonable to go back as 5 years. What is the level of return? What is the level of revenues that you are making on annual basis?
Okay.
What are your margins from your business? What is the level of your margin? Is it 20%? Is your net margin 20%, 30%?
Yeah.
What is also your level of margin compared to businesses in the same industry, operating in the same level of, say, in the SME sector?
Yeah.
You could be that you have a business next door doing the same thing, but they are operating at a net margin of 50%.
Okay.
Your business is at 10%, and yet your revenues are the same. So those are the issues that one will look at before they make an investment.
And Alex, from where you sit, what is one of the common mistakes that you see in terms of bookkeeping that a lot of SMEs and other companies are making?
You face a scenario where these SMEs start having manual. They keep everything manual.
Yeah.
Then the business grows, and you forget to grow. You grow the business, but you also forget to update your systems of bookkeeping.
Okay.
Then you get to a level that you have so many transactions, you can't even keep track of those transactions.
Yeah.
Now that becomes a challenge, because now you get to a point where you're not even able to have or prepare your financial statements at any given point or at the end of the year.
Yeah.
What you get yourself into is what I alluded to earlier, is you're not able to tell what is the actual performance of your business. Are you making a loss or you're making a profit at any given point? So biggest mistake is not investing in systems. Number two mistake that they also make is not realizing your business is growing and getting the right experts to be able to support you on your business, ensuring that you keeping the right books of accounts.
All right, and you've talked about the issue of just having the correct experts to be able to look at your books. But there's this perception from a lot of entrepreneurs that we have seen is my business is doing well. Why do I need to pay someone else to come and check my books? I also do not feel the need to have these physical books or these records. The business is doing well. The revenues are coming in. I'm able to sort of take care of my the cost of running this business. So why do I need them?
So the issue you're raising incorporates the general how do I put it? The general business management program we have for SMEs. Because if I'm a business owner, then I tend to want to do everything by myself. Without realizing that as the business grows, you actually need to start having, I would say, let go. Let go and I would say observe your business at a distance. The experts will help you look at the business in a different perspective from the owner yourself. They'll help you see what are the opportunities that you can look at to grow the business. Remember, if you're a business owner and you're involved in the day-to-day activities of the running of the business, then you don't focus on the bigger picture.
Which is what?
The bigger picture is, how is my business performing? Where do I need to be at in the next 1 year, in the next 2 years, in the next 3 years? There are businesses that are doing well and have opportunity to grow, but they've never explored because the owner is too busy inside the business. Yes. And
so Alex, how complex or how simple is this accounting system supposed to be? Because we've heard of RFX 19 and so forth, but how simple or how complex is it supposed to be?
Okay. Thanks for asking that question. And I'm happy to say that currently we have a number of systems, even online systems, that are pretty straightforward. And they actually they've actually how do I put it? They've actually come up with platforms. Those platforms are actually meant for non-accountants. Because all you need to do is enter in what I've sold and what I've paid out. You get?
Yeah.
And then in terms of being able to prepare detailed financial statements, then you can have an accountant do that. But for a business owner, for a person who's in sales,
Yeah.
they can actually use that system. It's pretty straightforward. It's not as complex as the other systems we have, the ERPs that we have that are being used by the bigger companies. When you talk of SAP, Navision, but the systems as QuickBooks, as the others called Xero, Sun System, they've been simplified to be used by non-accountants.
Yeah.
And the cost of these systems are quite low. Most people are not aware. The cost of these systems is as low as $30-$40 per month.
Which is roughly 3,000, 4,000?
3,000, 4,000 per month. So you say you're looking at paying 36,000 on an annual basis, and you have your books in order.
But again, there's also this perception of how soon should I be reconciling my books? Is it a daily basis? And some will argue that doing it on a daily basis, there are days that you will have no sales. And the minute you start keying in those figures, it demoralizes you.
Now, I think for most business owners and for those who have succeeded will tell you that for you to, if you are a startup, for you to be able to progress from that position and to start growing, you must have the vision for the business.
Okay.
I think that is the first thing you must have. Otherwise, if you get into business and you don't have the vision for what you've decided to do, and you don't have the passion of what you're doing, then you'll fail in the first day.
Okay.
Because if you see that your sales and you're making low sales at a given point. For example, during this period, most businesses have actually been forced to close. Or even if they are operating at a very low level.
Okay.
Now, it's only a business person who has a passion for what they are doing that they will continue doing what they are doing. I just met a friend who was running a shop for clothing. So he told me people are not buying clothing. People have stopped buying clothing, so there are no sales. So what has he done? He has converted the shop to a grocery.
Oh, okay. That's an interesting shift.
But he's saying, this is not my passion. My passion is in clothing. But in the meantime, I want to remain afloat so that when things are up and working, I can go back to what is my passion. So, yes, you might have the system and at one point you don't make sales and you could get demoralized. It happens. But the only thing that will make you continue with your business is the passion for that business.
Because again, like my question around that was, how frequent should I reconcile my books of accounts? Your
books of accounts should be reconciled on a daily basis.
Okay.
And daily basis, it's as simple as looking at what are my sales for today? And what payments have I done today?
Okay.
It's also good to, in terms of your payments, to make sure you have a plan for the payments. As your business grows, you need to come up with processes, say, for example, for managing your accounts payables or managing your creditors. So that you say, for these creditors, I'll be paying them in 15 days, in 14 days, in 30 days. If you operate in a scenario where your creditors present an invoice and they want to be paid immediately, then you end up in problems. Because assuming today creditors are demanding you to pay them 10 million and you don't have that money in your account, you're just making sales of 200,000 per day.
Becomes a
problem. So it's critical to make sure you reconcile on a daily basis. Some will say, if my business is too small, why should I reconcile my business on a daily basis? Yes, you should, because what that does, it builds a culture for you as you grow. Because if you wait to grow and then you start thinking, I've been reconciling on a weekly basis, I need to do it on a daily basis, then you won't You won't shift back to a daily basis because you've grown. You can imagine you've been running a business for 5 years. You've been reconciling your books on a weekly basis. Then all of a sudden you need to shift to a daily basis. It's very difficult.
It becomes very hectic, even for you. And Alex, that reminds me, in terms of just looking at companies and looking at their books of account. These are companies you have no history whatsoever with, but you're just looking at it. What are some of the things that you would consider this is a red flag for me as an investor?
From a business perspective, it will be looking at the sales, the margins. The margins you have from your business.
Okay.
Because you might be looking at margins of 1%. And remember what I indicated earlier was that most businesses are continuing to operate because there is money circulating on a daily basis.
But in essence, they're not making money.
They are not making money. Okay. So if I'm a business person, I'll look at what kind of margins are you making? You could find out you've never looked at your business in that perspective. Your margins are negative. You're in losses.
Okay.
You also look at if you have debt, how are you servicing? Are you able to service the debt? As and when required.
Okay.
And what level of debt do you have? For in your company. You also look at what kind of assets do you have. What is the value of those assets? When is the last time that those assets were valued? To be able to know what is the actual value of the business, because the value of the business, as I said, critical is the assets looked at against the liabilities.
Okay, Alex, as we almost wind up, there's the question of recurrent expenditure.
Yes.
When do I need to get concerned about my recurrent expenditure as a business?
This is something you need to work on immediately.
Okay.
Immediately, I say immediately as you start your business. And what is recurrent expenditure? Recurrent expenditure, the most important thing is if you have employees. Being able to pay salaries for employees.
Okay.
Being able to pay for your bills, your electricity, your rent. And some of them you could call even their sunk costs, because if your business, assuming someone who's has a lease for 5 years and they are not operating this during this COVID period, they are still paying the rent. You get. So this is something you need to be concerned from when you start your business.
From inception.
And you need to track it so that you those costs are within reasonable margins. You're not having or getting in a position where those costs are almost 90% of your revenue.
Okay.
That is a big red flag.
My final question to you would be, for me as an SME owner, in terms of my bookkeeping, what do I need to do? What do I need to pay attention to? And what do I need to ignore?
Recommendation for an SME or even a startup, it's critical to get processes around bookkeeping and systems in place. When you start your business, you might think they are not critical. I can easily write my information or sales or payments in my notebook. But they eventually become critical because you have a vision to grow the business, either within 6 months, 1 year, or 2 years. It is also critical to ensure that you are compliance, tax compliance, which is embedded to bookkeeping. Because whatever you're paying as VAT or withholding tax, or even payroll taxes would be generated from your bookkeeping. It is critical to ensure that you are up to date with your tax compliance. But of most important, get an expert to get your processes in place, and recommend for you an accounting system that you need to use for your day-to-day running of your business, and also for your periodic reporting and preparation of financial statements. Well, indeed, that's a good place to end it. Alex, thank you so much for taking the time to speak to us. And that's how we wrap up this episode of the Business Hour. My name is Jimmy Mbogo, and remember,
Every hour is business hour.